to questions from the
Good
thing.
morning, everybody. Welcome back to the Opportunistic Trader. This is the AM Roadmap. Larry is running a few minutes late, and so this is Mike Aronovitz, and Vince Lancy is with us as well. How's it going, Vince?
Good morning. Very well. Thank you, Mike.
So I thought I'd start out by talking about the data that just came out. It looks like strong data. Retail sales came in month over month 0.8. We're looking for 0.5, so that's strong. And Philly Fed came in at, actually, I just
Twelve
see it on
nine.
my screen.
12.9, expecting 20, I think.
That's the business outlook. Hang on, there was a different.
Yeah.
Yeah. Okay. So I guess it is 12.9 versus 20, which is actually weak. I thought the initial number that was flashing was actually a stronger number. I must have been something
Well,
else.
retail strong, stronger than expected, but Philly Fed is weaker than expected. So, 6 and
Yeah,
one
and
half.
then November Empire Manufacturing came in at 23.3 versus 20. So that's a touch stronger. Philly Fed a touch weaker. Retail sales stronger. Looking at the note market, which is up to the bond market, notes they are pretty much unchanged on those releases. As well, we also had the jobless claims, which came in at 216 versus 213 estimates, so a touch higher, really non-event there. The big story overnight is out of the UK. The pound is down 1.5%. We're at 128 the figure right now. We traded down to 127.50. Yesterday and the day before we traded above 130. We had some resignations, continued shakeup there. Doesn't we've continued to see headlines, Brexit on, Brexit off, but they definitely have a lot of chaos going on over there, and that's
Yeah.
really the key.
Anyone who's listening, so we don't have to figure it out every 5 minutes. I put a big section in the gold report at the bottom that gives the most up to date a potential glide path. But yeah, it's a very politicized process now.
Absolutely. Oh, I mean, absolutely. Their minister, who's really in charge of Brexit, Rab, resigns, and it's where do they go next? And just even listening to them speaking, it's a it's a bit of chaos over there. And actually, on that, we're going to be speaking with Alan Hill tomorrow, who's based out of London, giving us all the details on Brexit. But right now, it seems like the pound actually just dropped 20 pips here. Say either way, it sounds like the pound's going to be offered because there's no resolution anytime soon. It's just like more chaos before we get any sort of light at the end of the tunnel. It seems like. So the pound is down 1.6%. The euro is roughly flat, so there's a euro sterling trade there. Other than the pound, not a whole lot moving in F and G10 FX. Dollar yen's down 30 pips. Not a whole lot of a move there. S&P was up all overnight. We traded as high as 27.16. We're right now down a point though at 26.97. Yesterday was really interesting trading late in the day. S&P traded down late in the day, up into between 11 and 2. We traded down to 26.86. Then we rallied up from 26.86 up to 27.20. And then came back off right in the last 30 minutes of trading. So it was whippy trading. We speak to a lot of different traders, and they were very frustrated with the price action yesterday. Larry was able to have 2 winning trades and 1 losing trade. He is long some Apple from about this level, from 188, I believe was he had a 188 limit. That's where we are right now. Very whippy price action from some of the traders that we were speaking to. They've been very frustrated with that. But today's also a big energy day. So Brexit's the big headline, but obviously energy, crude, nat gas has been all over the place. And we have 11 o'clock data due to the Veterans Day holiday, DOE data and natural gas data there today. And, at 11 o'clock, we have the crude data. Right now, Jan is trading... actually, DC is trading 56.48. I don't have Jan in front of me, but it's within 10 or so cents. And so it'll be really interesting to keep an eye on that. And really looking forward to 11. Actually, at 11:15, we're going to change the time. 11:15 due to the data. 11:15, Bryn Kelly and Mike Corner are going to be talking all things energy. That's really going to be a fascinating talk. I'm looking forward to hearing that. There's been no shortage of price action moves there, news. Tons of different things going on. So I'm really looking forward to hearing the way that they're parsing all that out and where do we go next? And it's not just the front month stuff that's really the key. It's really a lot of the different calendar things. So I'm looking forward to hearing that at 11:15 today. Vince, what do you got going on the radar?
I got a gold trade, possibly uh, above below 1198 as a sale. Maybe you want to fade it back in, and above 1217. But other than that, I don't see anything for me compelling yet. But that will change after the first hour, and by that I mean, uh, let me get it up there. Um, I'm looking at individual stocks today, uh, and how they react after the first hour. So I'd be looking at a 4 hour time frame, uh, starting with starting with Apple, for example. Um, Low confidence, but something I'm looking at. Uh, Apple back above uh, 191, which is, it's $5 or $4 or so. Gives me a signal that we're uh, putting in a short-term bottom, at least for the rest of the day. Or put the risk reward is there, is what I'm saying. Risk 4 to make 8, maybe back into those gapping areas. Uh, Amazon, which has got to be something that's going to be in play, especially with the New York thing. Uh, uh, there's big tax issues going on there and problems. I'd be wary of being long Amazon below 1593, and I would consider shorting it. It would be I would say it's a good signal on a 4 hour basis, but it's a low. It's a high risk, high reward, because you'd be risking $20 to make 40, which depends on how you perceive risk. On the banking side, individually, uh, there's really I'd love to be able to trade something, but it's just outside of my bandwidth right now. I tell you what's interesting. If you're despite the behavior of every other stock yesterday, the AMD was really strong, and I'm looking for another move in AMD, and we're right in the middle, and setting up for something I think possibly really good, uh, below below 19 and change. Your range is 19 and change to 2162, and above or below those levels, I think we're going to have a breakout. If you're looking to trade the range, maybe you want to fade those two numbers. If you're looking for breakouts like I do, trade above them. But that's what's on my radar. On the macro markets, on the ES, just looking at the indices. Um, wow. Well, the indices, I got actually, we're at the beginning of a narrowing. So I think by the end of today, will be. This is not a rocket science thing to say, but by the end of today, we will have at least touched 2710, and at least at least broke through 2690 after the open. And I say that because I think we're going to have some movement today. I'm biased bearish, but I'll let the numbers tell me what to do. So those are my levels today in the S&P or the ES, 2710 and 2692. I'm going to trade those after the first hour of the open if we get a break in them. Hope that helps.
Yeah, absolutely. What about what's your take on fixed income here? We've the 10-year traded up to 325 probably 6 weeks ago. That was kind of what they were calling the cause of the first kind of turbulence of the market. We then traded back down to 310 when the market sold off. Then got back almost up to that high, and now we're coming back off again. What are your thoughts here?
Um, uh, well, I mean, just briefly macro. I mean, you have dollar drainage, and that's nothing for bonds. It should be bearish for bonds because we're issuing bonds. You have the curve flattening, so that's recessionary. But looking, to be frank, looking right now at this very hour, I'm glad you brought it up. But looking at the 10-year bonds, just looking at it from a yield perspective, you should be short the yield. If you're trading the yield as opposed to the bond itself, uh, you should be short the yield right now at 309 and a half. No, thanks for pointing it out to me. With a stop at 310 and a half, which is pretty tight. but that's for like a 2 hour trade. I'm saying you want to be long bonds now or short the yield now with a 310.5 to 311.5 stop, looking for um, 307. There you go. You just pointed out a trade that I missed, but there's a trade right now going on. I think I might do that if it's still there when we get off. So that's my feel for today. But over the long haul, over the super long haul, which is what we're not trading today, I think bond yields. If bond yields go back to their previous highs, it's no disaster for stocks. Very similar to the comments that Larry will make about, the last time we were down here, VIX was 29, now it's 24. Right. So we'll need new highs in bond yields for people to panic a little bit. But I'm bearish on bond yields right now. So there's a trade in that, I think. I think we're going to make new lows for the week in bond yields, which are where we're at right now, close to it. Hope that helps.
Yeah, no, I mean, there's a lot of different things to take a look at here. The pound, as we spoke, we came on, it was at 127. We're now, I'm sorry, it was 128.05. Now we're at 127.70. I think that's very vulnerable. Got to keep an eye on that. But remember the post-Brexit reaction, everybody's looking for, the UK. It was interesting when the pound depreciated, the FTSE actually moved higher. A lot of people were actually looking at that it would be a FTSE, just kind of a risk off across all of UK. But the FTSE actually rallied, and we're seeing some of that today with the FTSE is actually, or I need to double check, but was not down before. So it wasn't much of an equity sort of event. Yeah, I mean, the FTSE is up 0.1%, whereas most of Europe's flat. DAX is down 0.1%. The Euro Stock 600 is down.
Well, that's a really good point, because I was watching that closely from 2016. The October 2016 Brexit plummet was, I think, let's see, I don't have the price in front of me, but I'm looking more at the euro. Let's see, investors were included. UK was going to crash out of the year with no agreement. Sterling would retest a flash crash low from October 2016, which is about 118.40. Now, to your point, back then, the British pound collapsed because the British pound has to, whether they stay in the European Union or not, they have to debase the pound that's too strong. And what they want is they want a weaker pound, but they want it on their terms, slower. The crash in 2016 then precipitated a rally in the stock market. And that is what you get. That's the classic. You rarely see it so tightly correlated, as you pointed out, but that is the correlation. A weaker currency makes stocks go up for two reasons. One, it goes up, especially if you're a country that has to export. Two, if you are a country that exports. Two, and I'm not saying Britain is an exporter or an importer now. I'm not saying what they are anymore. And two, stock prices go up as a partial hedge for inflation. If you look 2016, 2017, the worst performing currency was the pound. I did a post on that back then, and one of the best stock markets was the FTSE. So it's kind of like a booby prize, If inflation is 20%, if you're in Venezuela, I'm sure stocks are booming because it takes $1 billion to buy a share of stock because that $1 billion is worthless. So a weaker British pound may be bullish for UK stocks. I don't know the reason, but I know that's what happened before. A weaker weaker euro, which, by the way, British. Look, it's actually. Let me just put this in perspective. A no-deal Brexit, a drop in oil prices, the loss of economic momentum in the region complicates, I should say, the ECB's task. Brexit is bad for the British pound because it actually does what they want just too quickly. Brexit is bad for the euro. They've got problems in Italy too. All these things are just bullish dollar, and it's just we're doing this monetarily with our policies. But politically, they have to deal with what they deal with. I'm rambling on too much about it as bonds are making new lows in yields. So I think I've said enough. We'll let Alan talk about that tomorrow or later on.
Yeah, I mean, I'm just looking at the 30-year. We got up to 345. We're right now 334. The 10-year, we were back above. I think 322 was the high on this recent move, and here we are 309 and a half. And the 2-year got up to, I believe, 296, and right now 284. So, decent fall off there. And I've been looking at, some macro people that I talk to. They've started to look for yields to move in. We'll keep an eye on it. I'm not so sure, what yields are going to do. But it's, keeping an eye on the dollar, like you just said, unintentionally, not anything having to do with the U.S., but, this is a negative for the euro and for the pound, all this Brexit headache, which, turns into a dollar positive sort of thing. Earlier in the year, we were seeing EM versus the dollar move, the dollar versus EM move significantly higher. More recently, it's been more the G10 side versus the dollar.
And our policy is, the QT policy is slowly waving through the world. Emerging markets are hit first, and now it's contributing to problems in Europe. I wouldn't say it's the cause at all, but a phrase I heard yesterday that made me laugh. Forget who it was, but a European official said something like, regarding Italy, he's saying we're not seeing much contagion from in Europe, and not seeing much contagion is like only seeing one zombie in the neighborhood, only having one person infected with polio. That's the nature of contagion. We're not seeing much contagion. It's like half pregnant. How does that work? But anyway, there's contagion, and it's slow, but it's happening. The question is, will it reach our shores? And we had a brief glimpse of it, and the market forces took care of that. But it's waving. There's less dollars out there chasing, and that's forcing people to make a decision. Do you want to be in the dollar trading block, or do you want to be in the Eastern trading block, which will eventually be on the yuan? It's a little bit Orwellian, and Europe is in the middle, trying to figure out what they want to do. And there you have it. It's the future, and I'm just saying buy gold, but I'm not saying that today.
Yeah.
That's the bottom line.
Well, we did trade below 1,200 in gold. Was it yesterday or 2 days ago? I think both, Tuesday and Wednesday. And, we popped back up, resilient to a degree, I guess. High overnight is 12.17. We're right now 12 and a half. I mean, if there is a nasty outcome here, we saw in 2016 the pound get very volatile and other markets get volatile based off of that. At one point we saw a flash crash in the pound. We traded down like below, I think it was like 116, then we popped back up. But if we get volatility and things don't go well with Brexit, is that a reason to be buying gold, do you think?
If you're looking at 2016 as an indicator, you'd say yes, and I think you'd be wrong. By that I mean in 2016, you had, I think, a whole generation of people who sold gold as a hedge. Remember that the Brits, gold is a London product. It's sterling. They have a more of respect for gold as money. It's in their DNA, even if it's not in their currency. So when you had a collapse in the pound, you probably had everyone who had money putting it into dollars, and some of them putting it into gold, and gold and silver screamed higher. And it was one of those times where the dollar and gold ride at the same time, and it extended for a long period of time, but it doesn't last because gold may be money. It's not currency. You can't walk into a deli and get a ham and cheese on rye with a gold coin yet. I mean, you just can't do that. You're safer using
Well, on that note, what you just brought up there, let's talk about Bitcoin, which I think same sort of thing. You can't go into the deli with the ham, asking for the ham and rye, and pay for it in Bitcoin, and that's the other interesting story. We actually had Algo Ledge on Monday because for 3 months we've been doing nothing, and some interesting points were brought up. So right now, Bitcoin, I don't even know what indicator to look at, but I'm looking at something that has it at 55.51. I believe this is on Bifinex. I can't even see what it's on. But either way, we're below 6,000, somewhere between 5,200 and 5,800. we were trading around 6,500 for a few months, and Algoledge made the point, and we were talking about it, just general market psychology of people have been whether they're mining coins or holding on to coins, hoping for a move back to 7,500 or 8,500. I'm looking to sell there, I'm looking to sell there. But when we get one of these moves where, oh no, the next move is down after months and months and months, you're going to have some people that probably, and it might have been yesterday, or there might be more to come of, okay, now I got to sell. It's at 5,500. We're not going higher. I got to sell. And, that's kind of the next waterfall lower after a long consolidation. And whether it's Bitcoin or natural gas or any market, it's just market psychology. And, that's one thing that technical analysis, that's one of the, thoughts behind it is, it's a lot to do with psychology.
It's the classic concept of people getting too married to their investments. I can cite gold when it had the spike to 800 years ago, and a generation of gold bugs were born, waiting for it to go back up. You can cite .com stocks after 99, waiting for them to go up, and now you're looking at an investment that represents an ideology. Apple's an example of that, or was an example. Apple fanboys. An investment that represents an ideology where people are married to it for an identity purpose, like gold. I'm for sound money, or Bitcoin. I'm for borderless money, and those are valid ideologies, But if you're a libertarian who likes Bitcoin for that reason, you're married to the idea, and that makes you married to the stock. And now you've got a generation of Bitcoin bugs. You've got a generation of people that are holding gold forever, waiting for it to go back up, and they're going to die and give their gold to their kids. Well, welcome, dear Bitcoin, dear crypto people, married to an idea. You're welcome to the loser side of owning something and waiting for it to go back up. I'm not saying it won't go back up, but it causes some serious irrational trading, which is what you're describing right now.
Well, one thing on that, before we get into the next thing, just looking at, and we were talking about it a little yesterday, but everything for the past month, and not everything, but other than natural gas, I'm looking at, everything is down. Bitcoin down, oil down, stocks down, yields down. It's been a lot of red on the charts right now. Larry actually just came in. Vince and I have been talking about the Brexit move, overnight action. S&P started higher. We're now down 4 on the day. But Brexit's been one of the key headlines. Energy markets continue to be one of the headlines. What have you been talking about?
S&P basically started higher, lower, traded down at 86, and then actually traded up at about 3 in the morning off the European Open to the high of about 16 and some change, and now it looks very weak. To me, the story of the day, first of all, I don't know if the market's down this month. I think the market could potentially be up. Are you sure the S&P is down for the month?
Hold on. I'll throw a monthly chart up.
Because we rallied 200 handles. I just don't know if it came at the end of last month.
The S&P is on a monthly basis. It's
starting the
last month. Last month it closed at 27. Well, the ES closed at 2706.
Right, so we're nothing. I mean, they actually ramped them 135 and then crashed down. So they're down, but they're not down much. I think in the next couple of days it's going to become critical in here to see if the market is going to hold. And, we talk about up or down on the year. The market's up like literally under 1% or whatever. For the bears, I would think a better year would potentially be up small again. We have a lot of news out there. I don't know if, we have the meeting, the G20 and the side thing with Trump and Yi. There's a lot of stuff out there. I don't know if there was the outlier, and we were just in amazement yesterday, was this Bitcoin. And, I don't, really watch it. We weren't watching it because Mike and I would comment every day. It didn't move a dollar. And, I did a friend of mine is starting an amazing site, and he's going to be on here at some point. And they're, ex, big Wall Street guys that are doing this. But they, he was talking to me about something about forking of coins. Like they fork
Yeah.
these coins, and nobody even. I mean, it's so fake. What he was telling me, I couldn't even understand it. It's like,
Well, I mean, if I could just throw this in here, the
sure,
problem with liquidity on coins is scalability. One of the big problems with crypto products is scalability. So you can't, the technology's not there to scale fast enough, and so they're creating what's called a hard. You've seen this in the past, and you'll see it again, a hard fork, which is a way to appease the miners, and at the same time,
but he
it's
was
kind of like a stock.
explaining the
It's kind of like a
fork.
stock split.
Right. But the fork isn't working, or this new fork
Correct.
isn't working,
Correct.
or whatever. I listen, I think
Forks
it's all,
don't work.
I don't
The
know.
product isn't scalable until you get quantum computing, and that's part of the problem.
Well, the product doesn't work because there's no reason to have it unless you're doing an illegal transaction. Like, why would you want to use that to do anything when you can use a government product to maneuver money or to pay your bills? So, and then I was listening last night. Christine Lagarde was talking, and she said that they're going to do a global digital currency. That's
Of
what their
course.
plan is. So
It's going to be
if they do
great.
that, it's game over. Then you have no excuse to have Bitcoin, because the only people that are using
Well, then
it are
Bitcoin becomes the
bookmakers
gold
and
of
drug
cryptos
dealers.
in the sense that you, it's money with. This is a one world thing. This is a globalist dream. If you have SDRs and then you have a crypto SDR, you have you have a triple derivative removed of actual money, and that's what they want. I mean, that's what they want, and obviously, it'll basically be convenience versus freedom. If you're a person who thinks about things this way, a crypto, let's just say, whether you think it's a valid product or not, a crypto as a means of transfer allows you to transact business across borders without the hassle. And I'm referring to the fact that humans need passports and corporations don't. But if you can demonize a crypto, or a crypto itself collapses under the weight of its own ineptitude, and you create a global or government crypto, what you've done is you've basically taken electronic transfers, and you've made it. Look, I've written many articles about how cash is going to be erased, and this is part of it. But people should understand that SDRs, before you even get into crypto, if the IMF has its way, SDRs will be the new what's the word I'm looking for? Monetary standard or reserve currency, and it's a basket of currencies. But here's the thing: an SDR isn't even a basket of currencies; it's a basket of IOUs of currencies. So an SDR may be 40% US dollar, 20% X, 20% Y, but there's nothing in it. So it's a derivative of a derivative of a derivative. And when you get into the crypto thing, it'll be a matter of convenience. Oh, it's easy to get my money from an ATM, so I'm going to do that. And what ends up happening is the ATM used to be free. Now you pay $2 for it if it's not your own bank. So this is a way of keeping nation states together, but at the same time letting trade cross borders. That's an opinion.
That was
But
very.
crypto, there's an easy negative case to be made for products like Bitcoin. It's very simple. It's a product that has a limited source, that is backed by the faith of the people buying it, and the counterparty is a guy who is anonymous. That's a legitimate wrap. I mean,
Yeah, I don't see any trading. Like I was adding up the total volume today on Coinbase. On Bitcoin, it's like $20 million. I mean,
yeah.
Yesterday it wasn't even 100 on a debacle, and
Right.
and the product, Bitcoin is now under 100 billion. It's like it's like trading Twitter.
It's a classic boom and bust bubble. It's a classic boom and bust bubble. Probably have an echo.
I don't even
probably
think
have an
it
echo,
bust.
and then it'll go back down again.
I don't even think it busted yet. I don't even think it's close. I mean, a bust is back down to 2,000 or
no. I mean, boom bust echo is actually a terminology. Like you have the high, the bubble bursts, and then it goes sideways and maybe lower, and then you have a little bit of an echo, kind of like a little bit of a second hump, and then it flatlines and goes down. It's like it's something that Soros said when he was worth listening to. Boom, bust, and echo. Kind of like if you look at a silver chart from the 70s, it did that. And if you look at the tech stocks in the 90s, they did that. It's like a dead cat bounce, only bigger.
Mm-hmm.
We haven't had that yet. Or maybe we have. Who knows?
Oh, I don't know. Maybe I just don't know what holding it in for 2 months is at a price, and then literally it just dropped. It's down another 4%. It's probably going to be down
at this
another
point.
10
To your
today.
point, if Bitcoin is going to do this, then it loses its status as something. It's no longer something that creates wealth, which was ridiculous to think it should anyway. It loses its potential status as a means of exchange. So I'd rather use PayPal than that. And if you're trying to market it as a source of value or store of value in a true competition with oil, with gold or something like that, stability, it just lost that. So yeah, if I were the IMF or the Christine Lagarde, I'd wait for Bitcoin to go to zero and then just buy it and take it private, and make that the government currency.
Listen, I don't know. I just know that I've been around for 34 or 5 years trading, and I've never seen anything do this quick, where it didn't even get, like, it got people in, don't get me wrong, and everyone a year ago today was talking about Bitcoin. You couldn't go to a lunch or whatever, and definitely it had that speculation, and everyone somehow got it. But overall, it didn't even last a year really of good. It literally, It went up too fast, it went down too fast, and I'll tell you, it's very interesting. Again, I was talking to this guy who we will have on. He's really, really talented. He was saying, like, Coinbase made like net profits last year of like $500 million or maybe a little bit more, profits. So
yeah, just on the volume.
Right. Well, they were marking the volume up 10% a trade. Now, in the equity market, you can trade where they give you money back. You don't even pay commission. They'll pay you to trade. So here's a model where you're making over 10+% per trade, but it didn't matter to people because they were making 50% in an hour. But now it matters because they can't make a dime. So the 10% commission that they're being charged, now they're buying the thing at 5,200. It's like you're really buying it at 5,250.
That's an excellent point. How do you maintain your revenue stream in a product that's doing that?
Right.
And your point about it wasn't even up blah 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 long. It wasn't even around. It hasn't even been around long enough to put it this way. It's like walking into a casino and saying, "I'll play blackjack," or "I'll play 5 hands of blackjack simultaneously," and it really, really cleaned people out quickly. Made and lost billions. It didn't even get a chance to be a bubble. You know what I mean? It wasn't long enough.
And it's very interesting because when they show it on CNBC, they show it off this exchange called the Bitfinex, which really has a big problem. They must have paid them to do it, or paid these people, because really the biggest market is Coinbase, for it. And Coinbase is trading at 53.50. Okay. The Bitfinex is trading 300 points higher. So I asked the guy for an explanation, and he was like, there's something trapped where it's supposed to be priced in to the US dollar, but it's at a discount and this and that. But it's funny because Bitcoin, you would think the CME futures would be the price of Bitcoin because that's really where it's trading. It's trading
you would, but the Bitcoin futures are. This is important, and I don't want to interrupt your flow, but I want to make this point. Anybody who's looking at Bitcoin on Bitfinex or Coinbase, that's the price of Bitcoin. Bitcoin futures settle in cash, not Bitcoins, so it's tracking and it will trade at a discount. Just keep that in mind. So the actual Bitcoins trade on those two other exchanges you described.
In the futures, Mike.
Yeah. Bitcoin was listed as futures to make money and to destroy volatility, and they've succeeded. That's me with a tinfoil hat on, but I know what I'm talking about on this. They created it.
Trades at a discount? Because I don't know if I see that.
Bitcoin futures should trade at a discount because they are settled in cash, not in Bitcoins.
Well, why would that be? Why would it be?
Because Bitcoins are limited, and the Bitcoin future is the derivative. It's kind of like a cash settled S&P index.
Yeah, it's about 20 cents.
They don't have the Bitcoins to do it. The government needed to regulate it. And I'm sorry to be, I don't mean to be paranoid. I'm talking about good business. The government needed to truly protect people from getting robbed on these things, the bad exchanges that were really insecure, even though the coin is secure, the exchange custodial aspect isn't. And so they created a future. And by doing that, they regulated it, protecting U.S. consumers, but at the same time, they crushed volatility. I'm sorry, Larry, on that note, I apologize, but is it okay if I jump off a little bit early here?
Sure.
I have to
no worries.
take care of something.
No
but
worries.
When Bitcoin goes to zero, I'm going to be buying puts on it.
All right.
Oh, wait a minute. But I'll be hedging them 1-to-1. Come on.
Your parting shot is when Bitcoin goes to zero, you'll be buying puts on it?
How are you gonna
sure, because at some point when Bitcoin goes to zero, there'll be so many class action lawsuits that'll have a negative net worth.
All right, Vince. Go.
Vince is signing off on that one.
Go.
Like
You're out.
Everybody knows everybody.
You're
Tom McEntee, please defend me here. A call's a put and a put's a call if you hedge it. I'm going to hedge it.
All right. Enjoy,
Thank you so much, Larry. I'll see you in the chat room.
Day.
I'm definitely looking at gold and a couple individual stocks today. I hope to have some good trades.
On an individual stock note, it looks like Walmart came out at 7 in the morning. Solid numbers across the board. Raised their guidance. They were looking for next quarter to be 460 to 480. Now they've said 475 to 485. The Q3 results were solid. Right now, Walmart's trading up 1.5%. So, we'll keep an eye on that after the bell. Today's really one of the last important days of earnings. They were saying some tech names after the bell, AMAT, NVIDIA. So, keep an eye on that. But so far, Walmart looks good. That said, remember what Home Depot did when it came out. It looked good pre-market, and that turned ugly fast.
Well, where's Walmart trading?
It's up about $1.50 right now.
All right.
103.06.
All right. I mean, I'm looking. The holders punted Facebook yesterday. I saw Tepper got out of Facebook, and he bought our long position, Apple.
I thought you were going to say GE.
What?
I thought you were going to say GE.
No, that's not in our. That's not at the Opportunistic Trader. Okay, that's in a long-term holding account that we're not looking at for 2 years. But no, Apple's up $1.70. We're up on it. Tepper added. He didn't even add much. It's so funny how people get crazy when But he did sell out of his entire Facebook position. And I saw Netflix was exited. So it's going to be an interesting day. Market looks extremely heavy. We're about 20 handles up on the year in the S&P. I expect it to be on the other side of that. I don't know if it's going to be this afternoon or when it's going to be. But we'll keep an eye on that. But the FANGs are down anywhere from 50 basis points to 2%. Except for Apple, which isn't really a FANG, it's the extra A. And volatility is very elevated. I will tell you, it's at 21.46. And what's interesting is when we saw it here last time, the VIX futures were trading at like 18. I mean, I don't know who runs this product or who's manipulating it, but it's unbelievable. It's so good. I mean, it's like it knows. And so it's leading me to believe that there's a little bit more downside here because the discount between the futures and the cash is not very much. So I'm expecting a little bit of another wave here. I'm gonna be excited to see if we get a back-to-back Bitcoin trading day. They're trying to stop Bitcoin from trading today. I see it's only down about 1%.
Well, I think, like I said right before we jumped on, it's just like any other market psychology. We had Algoledge on just Monday talking about how all these guys are stuck. They've been holding. The long-term guys saying, "Hey, I wanted to get up to 7,500, 8,500, then I'll sell." But it's like, okay, if now all of a sudden they've been holding these coins that they just minted and they were looking to make a bit of a profit because break even on the mining was 6,500. Now all of a sudden we're at 56,000, then 5,500. Then if we get to 5,000, they have to start selling at some point to get some cash.
I believe that could be true, but the only thing is I'm looking at volumes, and if you have real coins to sell, if you have $100 million in coins, you can't sell them.
Well, even if you have $35,000 in coins. I'm
Oh,
just
you
saying
could
as an
sell it.
example.
No,
No,
you
you can
could
sell it,
sell
but I'm just
those.
saying all of a sudden it's the market
No, but
psychology of, hey,
it's-
it's 6,500. If it gets up to 75, maybe I'll sell, but now we're at 5,000.
I know,
you
but the guy with 35 grand or 150 grand, that's not market impactful. It's the guy that's mining with a freaking warehouse in Miami, who I know a guy, has 5 warehouses and he's producing, I don't know how many coins a
Right,
day.
exactly.
That's the guy you got to worry about, because that guy can't liquidate. Oh, the SPOO's just tanked, by the way.
Yeah, we're now down.
Down 10, and NASDAQ is now down 13. The only stalwart is Apple, which we're now not up money.
And we got the bonds on the high of the day, the 10-year on the high of the day. Just quickly going over the schedule, we're going to have a great day, busy day. Due to the Veterans Day, the energy data is out today, both nat gas and crude. And we're going to be speaking with Bryn and Mike Korn. Bryn of the Fundamental Angle and Mike Korn. Great energy discussion. I'm looking forward to hearing from them about all things nat gas and crude and products. A ton for them to talk about. So they'll be coming on actually at 11:15. So the data is going to come out at 11. They're going to come on at 11:15. They'll talk about the data and then talk about everything else. 12:15, we're going to have Angie Setzer of Citizen Grain talking about ags, and also she has some info on energy as well. So we're going to be talking about that at 12:15 with her. And then Tom McEntee, 1 o'clock, talking equities. We'll probably take a look at NVIDIA, AMAT, some things there. So a lot going on there. Then Larry's going to be on throughout the day. Active market, a lot going on.
All right, looking forward to it. I just think today is going to be active. Looking back, if you want to just look back on the move, it actually was a crazy move if you think about it. Okay, so market traded off the low at 2,600. It kind of based at 2670, 80. Shorts were entering the market all the way up through 2740, thinking that it was ridiculous. And then the night of the election, somehow, which you haven't heard one word about the election since the day of the election, they said it was amazing. We couldn't understand it. Obviously, the market is the bare barometer of understanding, but we thought it was a negative, and the market traded up another 60 or 70 handles, blew everyone out of the trade, came back in, looked like it was going to hold at 2750, and then blew everybody out to the long, and now we're trading at 2683, and we're literally a minute away from potentially dropping another 30 to 50 handles. And if we do that, we're on the low of this move, not the low of the year. The low of the year happened in February at 2520-ish, or in that area. You're in areas that there's air pockets. So we're not there yet, but it's something to keep an eye on. And the market looks, the market doesn't feel right, but it does the same thing almost every day. I mean, starts the day up, then it goes down. Then when Europe opens, it explodes up. At 3 a.m, I happened to be up, and the S&P was trading. You could have sold as many as you want above 15. I mean, it was all bid, sizable bids.
We've now taken out yesterday's low, but we were talking to some frustrated traders yesterday of, we traded down at about 2 o'clock at 26. We traded down to 26.86, then we rallied all the way back up to 27.20. You faded that move. You sold it at 27.15, I believe, and covered it like 02 or 03. But I mean, that was a nasty squeeze in the late afternoon, only to come off. And then here we are. We just took out those lows.
Yeah, it was crazy. It looked like, well, it was funny. I was talking to some guys, which I do all the time, and anyone always feel free to reach out to me, through the chat, or even, I'd be willing to give my phone to anybody. But we were chatting, and it was funny. It's almost like people trade per the price action. So it's really interesting. When the price is low, everybody wants to sell. Then it rallies 20 handles, and everybody's scared to sell and they want to buy. So yesterday was one of those times. At 3 o'clock, the S&P was trading at 26.99 or so, and everybody wanted a short. And the bottom line is, the market rocketed $20, and when I spoke to those same guys again, they had no opinion. So it's interesting to me that the market could rocket up 20 handles and no one wants to make a sale. But if we close where we're trading right now, everybody would be short. So you gotta, as a trader, you gotta be careful, especially in this environment. Everybody's looking for a massive price increase. and the bottom line is, or a massive down move. This is a counter trend trading market. This is a great trading market. It's down 13 now. It would not shock me if we went positive. It would not shock me if we went down 25 and then rallied 20. So you're going to have a lot of chances. This is a good chance market right here, but obviously that'll change on a dime. So keep an eye on the market. We're at the lows, as Mike said, through yesterday's lows. We should trade down here. Unchanged on the year, I think, is around 26.70 on the.
We're pretty close. We're within striking distance here, and I'm just looking at the straddle right here. I'm pulling that up.
It's a 2-day straddle.
2-day straddle, exactly. It's about $40.
Yeah, so at a 25 vol, it's a $50 straddle. So those are great trading ranges. We're making a new low as we speak. We're basically unchanged on the year again. They just took 3.5% out of the market, and the next move, I guess, is on. Scary to say, it's on Trump. See if he caves into the Chinese PM. I would say this. I was actually, I know you guys will think it's crazy, but I was actually thinking about this last night. Here's the story. Okay, Trump is out of here in less than 2 years now. Okay, just slightly less than 2 years. Okay, but his counterpart is in for life. So if this guy slow plays it for the next 2 years, there's a high probability that Trump will not be there. Okay, whether he runs or not, or whether he wins or not, all that stuff is up in the air. But he's getting older. I think he'll be in his 80s for the next run. I don't see it. Or maybe he'll be 81 or 80, something like that. He may or may not run, but the point being, China can wait us out. They got all the time in the world. We're the ones that have no time, or Trump has no time. So he has to get a deal structured. If I was the guy in China, I'd be like, okay.
Donald J is 72.
72, so he'll be 74 on the next run. So he'll almost be 80 years old as a president.
I think you're actually asking him to tweet the Opportunistic Trader. You're insulting his age. You're calling him. He's gonna go crazy.
He's a young man of 72. He'll be done if he runs twice at almost 80. I don't know who is the oldest president. That's a good question.
I think Ronald Reagan might be.
Really?
I could be off on that.
Yeah, I don't know about that.
I'll ask our friends at Google.
We know it's not an old timer because those guys didn't live to 70. The average lifespan has increased over the years. But
boom, I was correct.
Reagan, what was he, 80? Trump might beat him. I don't think he was 80, but
the oldest to win an election was Ronald Reagan, who was 73 years old. So
right.
actually,
so Trump will be the oldest president.
I guess would be the oldest. I need to read more into this.
Yeah, he'll be the oldest president. Yeah. So I don't know if he wants that.
And same thing, yes. So it would be, because this is saying Ronald Reagan, the oldest to win an election was Ronald Reagan, who was 73 at the time of his second term.
Right.
So
Trump will be 74.
74-ish.
Yeah, so it's pretty crazy. Well, anyway, the point being, it wasn't even about his age. It's the fact that he's up in 2 years, a year and a half, and this guy's in for life, so he can outlast him. And I don't expect a deal, and I don't expect any easy talk with this guy. It doesn't make sense for them to do it. But I will say that, and I said it yesterday, and I'll say it again: the EEM and the Chinese markets have held up a little bit better in here, and the stocks are pretty firm. But today should be a really interesting trading day. If we do go down another 10, 15 handles, I think you're going to see a high spike in volatility. It's already up to almost 22. It's trading on the high of the day as we speak. Once we get to 22, 23, all bets are off down to the lows. Volatility. Even when we spiked the first time down, we only went to 24, 25. So we'll see. We'll see where this thing goes. I noticed just quickly, and then we'll let everybody go because it's kind of close to the opening. Warren Buffett bought, a bunch of banks again. He bought more JP Morgan. He owns just every bank, and I'm not understanding it, but obviously he's a lot smarter than me. But with a change in the House and having Maxine Waters and all these people now pretty much in control of all of these regulations, it could get a little bit crazy. But today, you know, we're down in an area where you could maybe look to buy. We may put a bid in below where we are now. That would be our first transaction. You know, I wouldn't sell in this area. It's not in the wheelhouse of what I do, but this could be a whitewash day. We don't know. But we have our Apple. We're back up on it. It actually looks like the strongest thing on the board. Hoping it stays that way. S&P is down 12 and the NASDAQ is down 18. NASDAQ reversed hard. I was surprised before when it was up because I saw Amazon was down like 15. So Amazon is coming back down a little bit. Still $170 off the low. But coming down
170. Did we trade 1400?
I thought we traded around 1420. Here, check it. Definitely traded in the 14s.
We traded like 1450.
1450, whatever. So we're 120 off the low, whatever. Same difference. We're nowhere near the low. But it's interesting because it's another thing we talked about. Apple, when the S&P made the low at 2600, was trading at 230. So Apple came in like $50 or $45, and the S&P rallied 85 points. So go figure. We'll be back to everybody. Wish everybody luck today. You know, stay nimble. The British pound before we go, 128. This is big.
Yeah, we were talking about that before you got in. A lot of Brexit news overnight. We traded down to 127.50.
They're never. What do they say? They're not exiting now. I mean, it's going to be the longest.
Basically in charge of the Brexit resigned. Basically doesn't. You know, he supports Theresa May, but doesn't want to be part of this. Doesn't want his name on the deal for sure. He just doesn't like a few different things. So this thing's going nowhere good, nowhere fast.
Well, it's definitely on the lows. I mean, if it drops another handle, it's outside the range. So we'll keep an eye on that, and we'll be back to everybody after the opening. Good luck, everyone.
We're going to have Joe Vaclavec's Ag Overnight Overview coming up right now.